Fantastic. Welcome one, welcome all to the channel today. Over the years, and since the 70s, since I've been watching this stuff, over the decades, it is not uncommon when a stock has a good run, there's a big momentum play going on, and people start asking others, hey, have you heard about this? Have you heard about this? Or I hear about that. Have you heard about that? And the rumor mill goes nuts whenever a stock starts moving up, because everybody wants to join in on the party. And what you have happen, and this is happening here to people who've talked to me, people start buying into the story well after the fact, thinking that, oh, there's no limit to the upside, immediate limit. I mean, the fact that the stock has gone from this level to this level doesn't mean it can't go to the moon now. Oh, well, yeah, it does. But no one wants to hear that, especially those who are looking for the score. And the further a stock moves up, the more aggressive the promotion gets and the more hyped it gets. And then people come in who are the desperados, the Johnny-come-latelys, the last guys to the party who think that the keg will never go dry. And once the keg does go dry, the conspiracy theories come out. And that's what we're getting now. We're now getting the conspiracy theory accusations. So the conspiracy theories are, well, there's this dark pool of stock that trades off the market. You see, there's brokers out there that are playing games with the hedge funds, and what they're doing is they're keeping stock trades away from the open market. And so there's trading going on where people want to buy stock, but they don't buy stock. They don't end up buying stock on the exchange, on the New York Stock Exchange for GameStop. They're buying stock from stockbrokers who are creating over-the-counter pools for the stock, because that's how they clear all their trades, and that's what they're doing. And it's a big, giant Ponzi scheme to limit the upside of the stock by not allowing it to trade on the floor and only putting sell orders in on the floor to keep it down against those who do buy on the floor, and on. This is conspiracy theory talk, and it's getting intense, very intense. This happens all the time. This happened in the 70s and the 80s, where there were people accusing others of shenanigans on trading, and on it went. And maybe there is some of that. I'm not saying there isn't, but there could be very well some trading going on between, for example, like with Robinhood, where they are taking orders to buy and sell stock all the time. They have 8 million accounts. Do 1 million accounts have GameStop in it? Maybe they have 1 million GameStop players. And they do business, buying and selling all the time. Maybe they're doing clearing with Citadel on these small 2 and 3 and 5 share orders. These are all being cleared off market in the Citadel pool that they're running. Does that mean that millions of shares of buying are not showing up on the exchange? Actually, no, because what ends up happening is if there's a buy wave coming in, more buys and sells, and more shares wanted than offered. Citadel will do crosses and give people instant fills, which is what you demand. You want an instant result, and you want it within the market. You'll get it, no fees, perfect, great. But as soon as Citadel moves 100 shares and is now needs to buy 100, they put an order in to buy 100, a board lot. They get an instant fill. It's all on computer. It's all in milliseconds, okay? This is all happening in milliseconds. They get the fill for 100 and they're flat again. Then more, another half a second later, another 3,000 orders are coming in, buy and sell all over the place. It's just maddening to try. You can't watch it. It's just the chips are just doing this. And Citadel's either buying 100, selling 100, buying 100, selling 100, buying 200, selling 200 is on the open market after they've got these board lots figured out. At the end of the day, Citadel's flat. Citadel doesn't have any stock in this pool. They're not short a bunch of stock. They're not long a bunch of stock. They've just traded a bunch of stock between investors, millions of them, to work out the final quotes. New York ultimately gets the business. The New York Stock Exchange ultimately gets all the trades going through there, but generally speaking, in board lots. Because the specialist for GameStop, for the New York Stock Exchange, who handles, decides whether to halt the market or not when there's an imbalance, that individual does not deal in 2 share orders. That doesn't ever get to this guy in New York or these people in New York. New York has no interest in handling 1.5 share buy orders or sell orders of GameStop or any other stock, any, period. Not just GameStop, any stock. And so all of these trades are happening through the computer systems of the brokerage firms until we get to a board lot level, which is 100 even shares. And that's when the trade takes place on New York in board lots. Now, I've simplified this, okay? I'm trying to bring this down to a plain English for you guys. So if millions of orders are coming in every day to buy and sell stock on GameStop, and it translates into 15, 20 million shares a day, which we're watching now, which we saw yesterday, 24 million shares trade hands. It's possible of the 24 million that traded hands yesterday, 5 million were done by small investors, less than 100 shares each, okay? Maybe even less than a share each, like, half a share to 2.5 shares. Lots of this kind of stuff going on. Maybe 5 million of all the shares were represented. But those shares did trade on the New York Exchange in board lots as they were assembled, nanosecond over nanosecond over nanosecond. It's imperceptible to notice it, because we, even with our human eye, couldn't watch it faster than it's actually happening. The computers are doing it all. At the end of the day, Citadel wants to be flat. Robinhood wants to be flat. The clients want to get their fill. There's no fees for the customers, no $25 minimum transaction fee like there used to be, or $100 minimum transaction fee. You're losing a third of a penny on your trades. So you're buying 30 shares, it cost you a penny. That's what it cost you. Maybe it cost you 10 cents. It might have cost you 3 cents. It's so insignificant. $1,200 order costs you 3 cents to generate. It's nothing. So Citadel, yet with those kinds of slivers, make money. They make money, and they rebate some of that money to Robinhood for the volume. It's pay for order flow, trade for order flow. Anyway, the shares ultimately do trade on the New York Exchange, but in board lots, because New York doesn't want to trade half a share. They don't want to see half share trades going. They're not set up for half share trades. That's not what the New York Stock Exchange floor is there for. And so if you get millions of shares coming through or trades going through, and in a nanosecond basis, in like 1 second, you might have 3,000 shares trade hands, a total of 3,000 shares. And it might be that 5 times in 1 second, Citadel has put an order into the floor to buy 600 shares, sell 600 shares, or buy 500, sell 400, buy 600, 800, sell 200. And these orders are getting done on the floor with other traders, again, in that second. And at the end of the second, a gazillion small investors have been filled at Robinhood, Fidelity, Schwab, and everywhere else these platform operators operate. And on the floor of the exchange, in that second, 8,000 shares have traded hands. 3,000 by miniature trades and 5,000 from board lot traders that are buying and selling 500 shares each on their own, or 1,000 shares on their own. This is how it works. This is a simplified, super small little example of the complexity of what you're dealing with here. So to try to read into this that there's a black pool of millions of shares of activity going on, and there's all kinds of diabolical people who are trying to control the market, not really. At the end of the day, though, there is an issue. And the issue that keeps coming up is the one where we do a Google search and say, who owns GameStop shares? And you enter that in Google, and you get a spit out of a chart showing you all these brand names, these big players. They own 9 million. This outfit owns 6 million. This one owns 2 million. This guy, all these funds, hedge funds, mutual funds, pension funds, ETFs, index funds, they are all listed there. And you do the math and you see at the bottom of the list, they own 130 million shares apparently, or 160 million, or 110. The numbers all over the map all the time, because it's never the same night after night after night. People are buying, selling every day. In any event, consistently, we see the number much higher than the actual number of shares in existence. And that's where we ask ourselves all the time, where do these shares come from? How can there be 130 to 160 million shares held by reporting institutions that report to the SEC when only 69.4 million, or whatever that number is, actually exist? We also know that there's 20-something million held by the management of the company. And so you add that to this list because management doesn't hold their stock in mutual funds. The president of the company does not have his shares in a mutual fund. He has his shares in his personal account. And so you figure out those shares, which are restricted from trading, and you add it to what's out there, and you try to put this all together, and you're going, my God, there could be over 210 million shares out there of this stock floating around. But there's only 70 million that actually have been created. What happens with these other 140 million? Isn't there a day? Doesn't a day come eventually where these 140 million shares have to be accounted for, and they have to be cleaned up? You can't just indefinitely do this, can you? Can you? We ask this. I ask this all the time. So, when will this 140 million be accounted for in the case of GameStop? What about, is the same could be said for AMC? Could there be a couple hundred million out there that haven't been delivered? Yeah, there could be. But with 400 million outstanding, it's easy to borrow 200 million shares from a pool that exists. That's the big difference between AMC and GameStop. With GameStop, there isn't 200 million shares you can borrow from the company. They don't have that. They didn't issue that. It doesn't exist. So where is it coming from? Why can it be carried? When will this end? Again, thank you all of you for being here and asking these questions. I appreciate it.